So this is Euro-dollar analysis for Monday the 9th of October. So let's first go out to the higher time frames and see what's actually happened here. Let's just get scaling on there correct. And as we can see, we did have, we had prices come down. You could say this was like a triple bottom on monthly time frame. Did push a bit lower, and we've had quite a few consecutive months to the upside. Now, the month of September, that actually pushed up all the way up to near 21.21, but subsequently sold off and ended bearish. Now, this week is the second week of October, and last week we did finish bearish, as can be seen by the small candle. So I'm just going to go down a time frame, go on to the weekly, and as you can see on the weekly, we have come down to the 200 period moving average. We've been bought back up off it a few times now, and where is it currently sitting? Let's just get on it's just 200 period moving average is currently sitting at well, I'll just say 117. So we're currently sitting at 117. So that's a possible area of support. So it's 117. As you can see by the wicks to the downside, we have pushed up back up from it. So we've come off the highs. We're finding support here. We've also got a 50 period moving average beneath the 200 period moving average, and the 50 is at 1645. That could potentially be another area of support. That 1645. But as you can see, we've come a bit off the top. We're still selling off a little bit, so we could still get a bull flag form on the weekly time frame before a further push up to 125. Now, if I go down to the daily time frame, so it's going to be a similar picture there. On the daily time frame, if you look at the over here and this over this period here with the days in August, we did have some indecision in the market. We did find some support, as can be indicated by these wicks here, and we did push up. Now we're into that area there currently, and we do see some bullish price momentum, but ultimately prices could just stall to the upside. This might be an area of consolidation before it pushes all the way back down to 1612. So if I go back, so I go down to say the execution time frame, which is the 1 hourly, well, the hourly, and we'll see what's happened. So we had an FP on Friday. The US lost 33,000 jobs, I think. It's over 30, just over 30,000. And the first move, and what often happens with a lot of these high-level, high-impact news events, is the first move is the wrong move. So it's almost like a case of could be sellers exiting positions, and a case of buyers exiting positions. Could be just a case of people repositioning, really. So you might see a move counter to what you expect, and you see a trend in the other direction. So initially, this 1 p.m. candle, or the NFP candle, push all the way down to below 1680. So it went as low as 1669, so 1670. And as you can see, the very next candle at 2 was a bullish candle. Now, if the market had interpreted the NFP as being bearish, the very next candle shouldn't be bullish, and the fact that we did close quite a bit off the low of 1670 based on the wick of the candle. It was only, was that 20 pips, is it? Yeah, 20 pips off the low, but the NFP candle wasn't particularly big in the first place. The 2 p.m. candle was bullish, and the 3 p.m. candle was, wow, just have a look at it. It's really bullish, and it's somewhat, the move was larger than the NFP candle. So now what are we seeing now? Well, we have breached the 1710, which I expect to be support based on the NFP, but we have come back, we have closed back above it, and closed back above it pretty strongly based on the 3 candle which opened at 3 p.m. on Friday. Now we are going to a bit of consolidation, and usually after such a big move, you might see a bit of consolidation, bull flag form for a continuation to the upside. Now, as we can see, this does appear that the bull flag is breaking out to the upside currently. and I'm expecting further continuation. So things to watch out for. We've got this 200 period moving average. The 200 period moving average is currently sitting at 1755. Oh gosh, I don't expect it to put up too much resistance. I'll move up to 1770 is what I'll be looking for to see what happens there, see how price forms, and let's see how bullish it is. Whether it consolidates and breaks down or breaks, holds the level from above, tests it before a further continuation to the upside. As can be seen over here, we've had you could say about 4 occasions here around 1770 more recently. First one being on the 3rd of October. During that period there, all the way up until the 5th of October, we had several tests of 1770, and prices weren't able to hold the level and subsequently broke down all the way down to 1710, and with an FP going all the way down to 1670. Now I'm expecting another test of 1770. Now as we've seen with quite a few other pairs, when a level's tested repeatedly, it's only a matter of time before it breaks, and I'm expecting a break if this momentum continues to the upside, and for another possible test of 1830, as the markets have interpreted NFP as being somewhat bullish, although we do have a bit of chaos in Europe with the Spain Catalonia thing, so, and also the Brexit talks as well. So overall, I am I'm cautiously bullish. I'm cautiously bullish up to 1770. I want to see what price does in and around that area before possibly looking for it to go up to 1830. Now, if I were to look at the most important pivot, I can't believe I've not put it on the chart. Let me just put it on the chart now, actually. I've just remembered. So the most important pivot is the weekly pivot, and this time is at 1728. So if I go down to the hourly, and let's just get it on the chart, 1728. So it's around about there. Change the color of it to, and just make sure it's all set correctly, the coordinates. Let's click off that. Let's just change the coordinates. Oh my word, there we go, 1728. There we are. So 1728, that's the most important pivot. If we remain above that level, I'm going to hold a bullish bias. If we trade below it, I am going to be hold a bearish bias towards the next support at 1710, and ultimately below that at 1612 if we go all the way, if we break down even further. But ultimately at the moment, everything's pointing to an upward move in euro dollar. So 1728 being a pivot, and let's just see. In relation to the previous month, we did say we were bearish in the monthly, but we're not overly bearish, to be honest, because the candle last week was pretty small. There wasn't a lot of volatility. There wasn't much range to the downside. As we've seen with NFP, the market was bought back up, so there are some willing buyers of the euro against the dollar. So that should wrap up the euro dollar. And before I go, LCS, like, comment, subscribe. Thanks for watching.